ZScaler just blew my socks off. Are they my next big purchase? Let's find out. By the way, Chat Mama Cat says to like and subscribe. By the way, there she is. Hope you can see her. So yeah, ZScaler recently trades at $169.96. This is actually the day after the earnings report. You'll notice this is a 5-year chart. So during the pandemic boom, ZScaler skyrocketed to $400 per share. And then it crashed. It cratered in 2022 and has yet to fully recover. It's not even close to its all-time high. So why did it skyrocket during the pandemic? It skyrocketed because of work from home and due to their business model, which we'll get into just a second. ZScaler has a forward PE of 52.08. You'll notice that indicates a profitability. Market cap, $25.5 billion. So what is ZScaler? What ZScaler is. If you work in the corporate world, you actually probably already know. Maybe. So yeah, what ZScaler does is they allow you to access your corporate resources. It could be your intranet, your private cloud, your public cloud. You can actually see it here, the data center. You can access all of that through your home computer, out of the office, through your phone, through your computer. And ZScaler is sort of like a middleman between the two, so you can connect to those offerings without a VPN. So this is a huge convenience for everybody. This is why ZScaler exploded during the COVID pandemic. It's because everybody's working from home. Everybody needed secure and strongly secure internet connection from home. They needed to access the internet from home, their corporate network from home, securely, quickly, and easily. And that's where ZScaler comes in. Now, there's a few. Now the thing is cybersecurity. What's the biggest thing with cybersecurity? It's everywhere. Every day there's some attack happening. Like, for example, recently there was a ransomware attack on U.S. healthcare payment processor, Change Healthcare actually. And that is considered the most serious incident of its kind. I'm not going to get into any more than that due to insider information, which I don't want to disclose. So moving on. So what is the TAM? So the thing is, companies will pay massive amounts of money to secure their networks. It is like the most critical thing in any organization. So they're going to fork over the money by the boatload to make sure that these hackers, these ransomware attackers, and everybody else cannot break into the network, cannot get their data, cannot destroy their data, cannot destroy their network, whatever. So anyway, what's the TAM? A new survey reveals a $2 trillion market opportunity for cybersecurity technology and service providers. That is huge. That's like 4 times or maybe 5 times. That's like 5 times Apple's entire revenues. So that is a massive TAM. Please note, that is the entire cybersecurity system. That's not just ZScaler's product. That's not just ZScaler's market. ZScaler is like a vertical within the cybersecurity umbrella. But it's still a huge TAM. So back in July of 2023, ZScaler started tanking. Their stock started tanking due to fears of competitors entering the space. In this case, it was Microsoft offering a competing product. The thing about Microsoft's product is that they are extremely late to the game. So ZScaler is basically, ZScaler and another company are basically the name brands in this space. So anyway, here's the income chart. Now, the thing about this income chart is that this does not include the most recent earnings report, where they're actually profitable. So let's continue on. But you'll notice that the revenue trend has been increasing dramatically and been consistent. It's been consistent and exponential. So yeah, very good charts. And you can see actually the contraction in operating income during 2021 and 2022. That's where they were sort of cratering and having trouble. This is where the competition became fierce in cybersecurity. But look, it looks like they're starting to sort of get out of that negativity, get out of that negative market sentiment, and get out of that unprofitability. Palo Alto Networks is actually going to release results by the time I release this video on Monday. So we'll see how they do. But ZScaler is doing well. So ZScaler has $2 billion in annual recurring revenue. The thing about tech firms is, how do you value a tech firm? A common metric is called the rule of 40. So that basically means you take these two items. You take the growth rate of revenue plus some margin. In this case, they chose free cash flow margin, which is 21%. You add those together, and it's way above 40. So the thing is, if you're above 40, that's considered a good thing. If you're below 40, it's considered a bad thing. And it's kind of relative to how the stock is valued, on whether the company is performing. And it's kind of a valuation metric for tech companies. Let's see, what do we have? 81% gross margin, pretty typical among tech companies. 116% dollar-based net retention. So their existing customers are paying more, which is always a good thing. So yeah, what was expected in the earnings? Let's see, that revenue expectations were $536 million. And let's see here. And the company's bottom line outlook calls for 69 cents to 70 cents for the fourth quarter. And we'll get to that in a minute. Okay, so what were the results for fiscal Q3 2024? They delivered 32% revenue growth. That is massive growth. And they're starting to turn into a big company. They're getting bigger. $553 million in revenue. And that's not even the best part. They've also got 30% in billings growth and 27% in RPO growth. Now they have 523 customers and $1 million plus in ARR, annual recurring revenue. Nearly 3,000 customers with $100,000 plus ARR. So they have a huge customer base. Greater than 30% of the Global 2000, greater than 40% of the Fortune 500. And they've got 22% non-GAAP operating margin, 22% free cash flow margin. That's one of the big features, is the free cash flow margin is massive for Zscaler. It is just massive. And $2.2 billion of cash and short-term investments. So what were the highlights? Revenue grows 32% to $553 million. We mentioned those other things. GAAP net income of $19.1 million compared to GAAP net loss of $46 million on a year-over-year basis. Now that is the key piece of the entire report. This is the first time that Zscaler has ever been GAAP net income profitable. And that's a pretty big number too. It's a big jump, actually, from negative $46 million to positive $19 million for a company only making $553 million in revenue. That difference in GAAP net income is massive. And this is the first time they've ever been net income profitable. So it's a milestone for the company, and they're executing in all cylinders. Let's continue. I have a lot more to discuss, actually, so stick around. Let's see here. Income for operation, GAAP loss from operations was $3 million. Let's see here. Net income was $19 million. We just discussed that. Non-GAAP net income was $140 million compared to $74.6 million. That's such a huge increase. It's such a huge increase. GAAP net income per share was 12 cents. See, our cash flow provided by operations was $173 million, deferred revenue of $1.5 billion, which is an increase of 34% year over year, and we discussed cash. So let's move on. Recent business highlights. So we got 2 acquisitions, Avalar Technologies and AirGap Networks, ZDC or ZDX Copilots. And okay, let's move on. For the outlook, revenue of $565 to $567 million for the fourth quarter. Non-GAAP income from operations $107 to $109 million. And you can read the rest here. Let's move on to the key points, the points that I like to talk about. We discussed most of these numbers. Is there anything we haven't discussed? Anything important that we haven't discussed? No, I don't think so. Okay, so the thing is, ZScaler has a lot of cash and a lot of short-term investments. $1.259 billion in cash, $980 million in short-term investments. Now, you tell me, how much debt does ZScaler have? I'll give you 5 seconds. Zero debt. There's a couple lease obligations, which every company has, but zero debt. So that is huge. That is huge. And actually, if you go back a couple pages to here, actually, the thing I forgot to mention is their interest income and interest expense. So look at interest income, $27 million. Interest expense, negative $2.7 million. So they are making massive money just from their cash. And that is massive for the company. Okay, so what do we have? We have Wall Street rates ZScaler a buy with a price target of $232.50. That is a 36.8% upside. That is amazing. If they achieve that, that is an amazing result. Now, what do the analysts think of this quarter? ZScaler delivers impressive quarter as shift to cloud securities gains momentum, Wedbush says. So yeah, what do I think of ZScaler? What I think is I'm impressed. They're executing on all cylinders, and they have this particular vertical that is growing massively that every company needs. Their TAM is huge and it's growing bigger, and every company in the world needs this type of a product. Their B2B sales are going to be massive. They're growing well. They're net income positive. Now, question is, am I buying ZScaler today? Almost. I'm almost there. What I need to do is I need to do a DCF on ZScaler, and I'm going to investigate 2 other companies in the sector, and then I'm going to make a decision. I'll make that decision shortly, actually. I give it about a week for me to make that decision, but it's looking really good, and it's looking really close. I really need that DCF valuation model before I make it my decision of whether or not to purchase. So let me know what you think. Do you like these results? Do you not like results? Do you have stock in ZScaler? What is your 1-year price target? Don't forget to like and subscribe. Thank you for watching, and I'll see you in the next one.